The Fantom token is currently crashing. It's taking a lot of a beating. The price is going down. The reason for that is Cronje, one of the main developers of the Fantom ecosystem. He's leaving the ecosystem. He's stopping to develop. He's stopping even to support his current applications, which are 25 in its number. And that's quite a lot for a blockchain. So he's leaving. He's potentially even shutting those applications down, and that reduces a lot of the total value locked on the blockchain. It reduces a lot of the hope that was in the blockchain, in the ecosystem. And so we see this. But it's not all just bad, because actually maybe we can take opportunity of this. And in order to find out, is this actually a time to buy? Is this worth the risk of investing now? We will look at a trading strategy. We will look at a trading strategy of buying and selling Fantom according to a fixed set of rules. And the results of that fixed set of rules, the historical results of the simulation of buying and selling the Fantom token, when we run that simulation, we come to this kind of a portfolio development. Not too bad, right? So this portfolio made more than 10,000 US dollars in the life of Fantom's existence. And the strategy behind this means we buy or sell with 1,000 US dollars with each bet. Okay, so 1,000 US dollars is our betting size. And just over the lifetime of Fantom, we would have created more than 10K in return. So this is what we're going to look at. So we will have a lot of topics over here. We've got obviously the current situation with Andre. We've got this trading setup. We've got the explanation on the statistics. How often do trades here actually work? We've got a lot of things to discuss. But let's first talk about the actual tweet, right? You probably have already seen this on other videos, but for completeness sake, we definitely want to look at this over here. So this was the announcement made by Anton Nell. Andre and I have decided that we are closing the chapter of contributing to the decentralized finance / cryptocurrency space. There are around 25 applications and services that we are terminating on the 3rd of April 2022. And then he goes on to mention some of those. He doesn't mention all of them, which is already quite interesting, right? So probably they didn't really expect to make such kind of a influence with that announcement. So it looks like this kind of an announcement, this kind of a tweet was just like left-handedly written. There wasn't really a lot of other information here. Now, what I find interesting, there are several things that are interesting here. But the first interesting thing, let's talk about this. Let's talk about those 25 apps, right? So Andre was involved in a lot of apps. And on some of those applications, when you go now, for example, to the Solidity exchange, or when you go, for example, to yearn.finance, you will see that announcement one more time written over here. So let's go to Yearn. We see when we enter here that the service will no longer be available from the 3rd of April. But there are other applications that are not mentioned over here that are still very, very large that I personally like to use. For example, here, Iron Bank. Iron Bank is also created by Andre. There is no such announcement over here. So will Iron Bank shut down? Nobody knows, right? And then the question is, what does this mean? Services are being terminated. Because the smart contract, one step back. When you go to a platform such as Iron Bank, right? You're basically dealing with two sets of technology here. The first set of technology is obviously the blockchain, right? The smart contract deployed on the Fantom blockchain. The EVM compatible contracts, they're written in Solidity, right, on the Ethereum programming language. That's the first thing. So what you could, in theory, do is you could go to ftmscan.com, just look at your transaction, see what kind of transactions have been performed, and you could completely skip this entire UI over here. You can actually perform all the actions without this UI. And so the second part of the technology is the UI. So you've got here just HTML and some integration with JavaScript. So for example, ethers.js or some other kind of library that then connects to the blockchain. So that's how this goes. So what this means is when Andre says he's going to terminate the services, he can't terminate the smart contracts. The smart contracts are still live. And there are even rumors, there are other sources that say that Andre is even handing over some of this code, right? Not just the smart contract code, but also the front end code, right? The HTML here, the user interface. He might be handing some of that stuff over. So what that means, right? Long story short, what that means is I think it's likely, given that the total value locked on these platforms is in the millions and millions, that there will be another developer that will write the user interface for the existing smart contracts. Because that's a pretty straightforward thing to do. Writing the user interface is way easier than writing the smart contract. The smart contract is the hard part because that needs to be audited, that can't be hacked, etc. The front end that interacts with the actions of the smart contract is comparatively easy, at least to my understanding. I've written front end code, I have written JavaScript, I've written CSS and all of that. That's easy. There's nothing fancy about this. But the Solidity code, that's what not a lot of people can do. And that's also where bugs are really problematic. Bugs in the front-end code aren't necessarily that problematic. So you want to make sure that you don't get hacked in the smart contract layer, not necessarily here on the HTML JavaScript layer. That's less of a concern. And so if you're a blockchain developer, right, or if you want to be associated with crypto in any way and you want to make yourself, and you want to get yourself some kind of reputation, what do? You create a front-end layer for the existing smart contracts, right? Then you are suddenly a voice that gets heard. You are now a person that maintains something like this, and you can build a rep for yourself and influence the blockchain environment, right? Influence the whole ecosystem. So that's what I think will happen. I think the smart contracts, they continue to live anyways. The front ends of these applications, some of them might be handed over, some of them might be completely shut down, but then other people are going to probably deploy or build those new applications again, put them on another server, the front ends, and connect to the existing smart contracts. And so I have my doubt that these applications here will actually terminate. I think they will continue to move on. They will continue to live on, just in another form, maintained by other people. And so I think the wording here is unfortunate. I think this should have been worded better, especially when Andre is already considering to hand some of the projects over to other people directly, right? When there's not even just other people replicating this. The second problem I have with the announcement is obviously that it's not very specific what is actually going to be deprecated or going to be shut down, so to speak. So that's my point over here. Now, given all of this, right, this obviously created a lot of panic. And so what we currently see is a Fantom price of $1.35, an 18% drop, one of the highest drops in the top 100 cryptocurrencies today. So it's not nice. We have seen similar drops before though. So what I think is important to note here is the nature of this drop, the extent of the drop, in order to then also come up with a potential risk to reward assessment over here. So let's first look at the price drop in relative terms, right? We have seen the exact same price just in on the 24th of February of this year, right? So not very far away from here, basically 2 weeks away. And then we have recovered pretty much at the same level. So that one might argue that this could be a potential support. Of course, supports don't always hold, but sometimes they hold at least for the short term, right? When we look at the past, we often bounce back up from such a support, at least for a short period. So support lines are a thing in crypto. These are mental hurdles, and people are less willing to sell when we are very close to a support, and they're more willing to buy. So just psychologically speaking, there's some kind of a self-fulfilling prophecy effect when there is a potential support line over here, right? The second point, which I think is very, very important to note here, is the heightened trading volume. So look at this over here, right? In white, we see the trading volume, and we can see it's very close to one of the highest values ever for Fantom. Okay, the trading volume is at 2.2 billion, roughly 2.5 billion. And we have rarely been at these elevated levels. What does high trading volume in the end mean? It simply means that the coin goes from one investor to the other, right? It changes hands. And so the psychological mindset of the person that held the coin over here is different to the person that buys over here. It's a different set of investors. New investors now hold the token. And when the trading volume is at very high level, at elevated levels, this often means that momentum turns around. So when there's a lot of hype happening, right? For example, here in Fantom, when trading volume was at the top, that also meant that the price was very elevated. Once the trading volume went down, the price also tends to go down. Same over here, trading volume is pretty high, price is relatively high, trading volume declines, price declines. But this also works the other way around. When we very quickly crash, that can also be the end of a crash. It can, but it doesn't have to. Let's look at, for example, Bitcoin over here. Let's look at Bitcoin during the Corona crash, right? When Bitcoin went down on a single day by more than 40%, I think it was around 42% on a single day, if I remember correctly. So that's this crash over here, right? I think it went down 42% on a day. We can actually measure this. Let's look at that. One sec. So from here to over here, 39%. Okay, so that's just day close to day close. Now, what's important here is to look at trading volume. So what we can do is we can simply add our volume. There we go. And let's look at this separately. Here, what we notice over here is trading volume was very, very high, right? Even in the grand scheme of things, if we scroll out here, you can barely see this now because of the color coding, but still, overall, trading volume was very, very high on this particular day, the 12th of March, 2020. Now, on this high trading volume day, the price of Bitcoin closed the lowest. Afterwards, we went back up. So when trading volume is high, it means the current momentum, which at this case here was negative momentum, it can turn around because now new people own the coin. And so we might have something, right? Nobody can read the future, right? I'm simply trying to present the data over here. We might have potentially a similar situation here where trading volume is very high. It's not record keeping high, right? We have seen slightly higher values before here with 3 billion. So it's not a record, but it's still pretty high. This could potentially mean a turnaround. Now, let's look at the capital locked within the Fantom ecosystem, the total value locked. For that, we've got a tool called DeFi Llama. And DeFi Llama shows us how much money is currently locked in each of those different blockchains. We also have a breakdown over here. In brown over here, we see Ethereum, right? Ethereum's market share over time is declining. Other competing smart contract platforms such as Fantom, they are taking over more and more market share. And so when we look just at the last day, right, within one day, Fantom's total value locked, Fantom's capital locked within the ecosystem went down by 20%. The last 7 days, it went down by 35%. So currently we're looking at a total value locked of 7 billion. Before that drop, one might argue maybe that Fantom and Avalanche was pretty much at similar levels, right? So they were very much head-to-head competitors. Now Fantom fell behind. Now, is this an opportunity? Let's look at the total value locked in US dollars. This is a chart. So we can see over here, this was a rally triggered by Daniele Sesta with a NFT drop. This was the rally dropped by the Solidly exchange that then also is supported by Cronje. So that's losing the most, right? And so we can see when we just look at this here, this recent drop, a lot of the recent total value locked drop is due or is in the same kind of region where we got this push here from the Solidly exchange. So Solidly is causing most of this money retraction from the blockchain. So that's what we're currently looking at. So it looks like currently, at least, the damage seems to be somewhat limited to the recent impact that Andre has had with Solidly. It doesn't look like to go way beyond this, right? The total value locked isn't yet at 3 billion or at 2 billion, going way to beginning of the year. And what does it even mean, right? Beginning of the year. It's like 3 months. Fluctuations of 3 months where we shoot up like this and then we would come down again to a level of 3 months ago. Is it really that bad? Is this like fundamentally a time shift? I'm not so sure. And so what's now important to state over here? What's important is the following. Fantom currently is on a sale, right? The Fantom price is very, very low. And when we compare this just in terms of charts, right, in TA perspective, if you keep the technical analysis very, very simple. When we look at the Fantom price in US dollars, I don't think it's very hard to see this sideways trading range. It's hard to argue against this actually. I think everybody who looks at this chart sees this sideways trading range. And so this again means when everybody sees this, that this can potentially become a self-fulfilling prophecy, right? When everybody sees these kind of levels over here as a potential support, then maybe we are not the only ones that see this potential risk of maybe 15% versus a potential reward of maybe 130%, right? If we are not the only ones who see that, then maybe this can move the market, right? If you think the price here goes up, and if everybody else thinks the price here will go up, now everybody else thinks it makes sense to buy when others are fearful, then this will become the truth, right? Because you are buying here because you think it might go up. Other people will buy. More and more people buying pushes the price up. It's self-fulfilling. Everybody tells themselves the same story. It will happen. That's the dynamics of the market. And so the question then is, the problem though, okay, so the problem though with this kind of an approach is that this is still somewhat subjective, right? Because drawing these kind of lines, they are helpful for these kind of obvious cases especially, but they can't really be tested. And so that's how I personally prefer to actually trade. When I set up something, when I set up a trading strategy, I like to look at it in the past. So I like to define a fixed rule set. I like to define a fixed trading rule set. And then I want to look at the past. How did this trading rule set perform in the past? A mathematical rule set. And then based on that, I want to buy and sell. I want to simulate buying and selling of how would this perform in the past. And then I want to come up with a result. And when the result is satisfactory, then I might consider using these kind of rules in the future. And that's where the following chart here comes in. This is where the performance chart comes in. This is a simulation of buying and selling the FTM token since its lifetime with $1,000 so if each trade, and during the lifetime of Fantom we would have made 10,000. Now this simulation does not include any kind of trading fees. It does not include any kind of slippage or any gas fees or anything like this. This is just raw buy versus sell prices, right? Bid equals to ask. Nothing like this here mentioned, but there's also no return from, for example, yield farming or so, right? One might potentially during these cash periods where we are just in cash over here, just hold, just do liquidity farm, return, right? Or lend the cryptocurrency out or something like this. So there is ways to actually even generate more return than what we have seen over here, what we see on this chart. Now, let me first go into the strategy, okay? Before we go too much into the backtest, and first explain what's actually the strategy here that I've backtested and that I personally now also use for trading. The idea is that we look at these short-term exaggeration. So we want to look at particular points in Fantom's history where there was also a lot of fear, where there was a lot of sell-off, people quickly sold off, the price dumped very quickly, and we want to measure this mathematically, and then we want to buy into that fear. And then we want to check, did that perform? And the answer is yes. Now, how do we measure fear? The best way, how I personally think, one way that is at least very good, who knows if it's the best way, but one way that I think is very good is to look at the RSI, at the relative strength index. And you want to look at this in a short time window because these crashes, they happen relatively quickly, right? You don't want to use the daily prices for this. In this case here, we use the hourly RSI. So I've selected here now the hourly time frame, and over here we've got the price. Let's get rid of the trading volume, and here we've got the RSI. And let's simplify this a little bit because I'm actually not using all of this data. So let's do the following. This is what I'm actually using. So here we've got the relative strength index. The calculation of the RSI is a bit complex, so I'm not going to go into details of that. But basically it measures how quickly is the price going up or down. When it's going down very, very quickly, then the RSI is very, very low. When it's going down very, very quickly as well. When it's going up very quickly, then the RSI is very, very high. And it ranges between 100 and 0. That's the range of the hourly RSI. Now, the idea is to buy whenever this hourly RSI is very low. So I've done a similar backtest for this for Ethereum. And so I want to show two different approaches to use this hourly RSI. The first approach is to simply use this for dollar cost averaging. Now, what's dollar cost averaging? It's buy-in buying regularly into a coin with a set amount of money. So the easiest way is, for example, when you've got Bitcoin, to buy for say $100 every month or every week some Bitcoin and buy into this regularly, independent of the price. The idea is that when Bitcoin's price is comparatively low, you get more Bitcoin for a US dollar. The price is relatively high, you get relatively less Bitcoin for a US dollar, but you buy regularly into the asset so that then when in the end parabolic rise does occur, and you don't really care when it happens, but when it does occur, that then you can take some chips off the table and you can make profit. Okay, so that's the idea of dollar cost averaging, not to try to time the market too much and to kind of get away from all of this market psychology, to not overanalyze things. Okay, so it's a straightforward way, dollar cost average into the market. Now, the standard approach simply thinks of, okay, we buy into this, say, on the 1st of every month, and we don't look at the price. But there's actually an improved version of this, which I've backtested, which is buying whenever the hourly RSI is below 20. So your average price is better than random when you decide to buy whenever the hourly RSI is 20. So below 20. So look at this here, for example, on the 22nd of January, this is now for Fantom. The hourly RSI was below 20. The price here was at $1.91. Before that, we had prices over $2. After that, we had prices over $2. And so this is definitely better in this time frame than just buying on a random price, right? A random price over here would probably be somewhere around, say, $2.50 or so. But by using the hourly RSI, we basically picked the bottom over here. But that being said, this doesn't mean it can't go further down, right? When we further scroll out over here, we do see that it can fall further, but it's simply better than just random. When we then look at the price where we again saw the hourly RSI low, this was again at a very depressed price. So we would have bought over here. Still a better price than whatever happened before and whatever happened afterwards. The reason why this strategy is good for dollar cost averaging is because you want to simply accumulate over the long term. You believe in the asset over the long term, and so you want to get a price that's better than just random, but you're okay even if the long-term trend, or let's say the medium-term trend for several weeks or months is down. That's okay. Unless you simply get a better price and just random flipping on the 1st of every month, you can use the strategy, the hourly RSI. Now, how well does this work better? Now, this is now why we've got the backtest, right? I've done this backtest with Ethereum. So if you're interested in buying Ethereum based on the hourly RSI, this is the kind of result you might expect. So if you buy when the hourly RSI is at 50, so somewhere in the middle, right? You just get the average price, right? You pay a little bit more than the average price. When you buy whenever the hourly RSI is at 20 or below, then on average, you pay a 40% lower price. So this is the discount from the average price. So the idea this was set up is simply, I looked at all the prices of Ethereum's history over this time period. So this was the 1st of January 2022 to July of last year. That's when I did that backtest. You look at all the prices, you take the average of all those prices. That would be the average price you would get by dollar cost averaging in, somewhat, right? And then you compare that average price to the average price, to the subset of a data where the RSI was 20 or below. So you look at all the prices, you average them out, and you compare them with only the prices whenever the hourly RSI was at these low levels. And when you do this, you find out when the hourly RSI is 20 or below, you get really, really nice discounts. Now, you don't want to go too low. You don't want to go on 10 or so, even though the discount is even crazier. But these kind of signals, they get triggered way less often. So the hourly RSI 20 gets triggered roughly once a month. That's why it might make sense to use for dollar cost averaging. The one for 15 only gets triggered every 3 to 4 months. And so with 10, maybe once a year or whatever it is. So that's why you want to use something like this. The further you go out with this hourly RSI, the less often this happens. On the other hand, here we've also got a discount, but that's something for another video. You can simply check out that video actually. When you look for Ethereum strategy on this channel, you can find an explanation of this. Quick summary though, I think here we get better than average prices for the high hourly RSI because that's when normally a trend starts to establish. Okay, so when a positive trend starts to establish and we get a sudden shake out to the top, sudden jump, then a new trend often starts, and so that's why we get better than average prices, even when buying when the hourly RSI is very, very high. The area you want to avoid is whenever the prices are just somewhere here in the middle. Okay, so I found this very interesting. Now, what about Fantom here, right? So buying Fantom during time of angst, right? What kind of return can we expect when we buy during these price dips? When the hourly RSI, when technical indicator, the hourly RSI is very low. And what kind of a level is good for that? So the idea we are now going to look at is we buy Fantom during times like now, right? When there's a crash, we buy Fantom during fear, and then we want to sell it, say 5 hours from here, or 10 hours from here, or 2 days from here. We want to sell it afterwards in a relatively short period of time, because what we actually want to do is we want to take advantage of this potentially oversold environment. When we look at this historically, right, the RSI here, the price over here, when we look at this historically, very often the price turned around when the hourly RSI was very low. We see this relatively often, but it's not a surefire win, right? Sometimes the price doesn't turn around. The question is, how much of a turnaround do we have? So let's look at this conceptually. Let's look at what we actually want to do now. How do we want to use this technical indicator in order to take advantage of these very fearful times? So let's draw first the price. Okay, so this could be a potential price development. Fantom's price might be moving like this, and then suddenly we get bad news and we get a quick crash down, right? And the hourly RSI during these times, it is comparatively low, right? We get a crash, the hourly RSI is very low. So we get a signal over here, okay? Hourly RSI is low. Now, what could then happen? Several things could happen, right? What I think is most likely, and that's why we do this simulation of buying and selling according to the past. That's why we do the back test. We do the back test, which resulted in this really, really nice positive movement. We do the back test because we want to know how often does it recover and by how much. So the price of Fantom could move like this afterwards. The price of Fantom could move like this afterwards. Maybe it goes down a bit further, then it recovers. Maybe it really loses afterwards. So there are several scenarios that could happen. And so what we want to find out is what's actually the typical scenario, what's the average scenario. So if we take all of those scenarios, so the price development after an hourly RSI signal, if you take all of those scenarios and we average this out, maybe in this particular example, we come to something like, maybe something like this, okay? So this could be maybe some kind of a development. So what we want to know is if this is actually first of all, we want to know, is this actually what's happening, right? Is the price on average really going to recover whenever we see a price dump? Is this strategy in general working, right? That's the first question. The second question is, how much is it working? If it does work, how much return can we expect from a single trade when we buy according to this? And then we want to know how often would something like this work, right? And how long would we have to hold? So let me break all of this down graphically. So this would be now our averaged out price movement after such a buying signal, right? Then we probably, if we are in such a situation, we probably want to sell over here, right? This would be a nice thing. We would buy here, we would sell here. So what we want to measure now is how long does it take until the recovery levels off, right? What's the time horizon after the hourly RSI signal where we can expect a price appreciation, where the oversold condition, where maybe people had forced liquidations, something like this, right? This is normally creating these spikes, or where maybe a stop loss was triggered, these kind of things. How long does it take until the oversold condition stops? So we want to get this T over here, right? What's the time? The second question is, how much of a return can we expect when buying into the fear? Okay, so that's our R, our expected return. Okay. The third thing that we want to know is probably how often does this work? So when we count all of those scenarios over here, right? What's our winning rate? Okay, so let's call this W. Okay, what's our winning rate? In this case here, in this drawing, so let's say this is neutral. In this case, we have 3 wins versus 2 losses. So here our winning rate would be 60%. Okay, how often, if we buy into the fear, do we actually win? So these are the kinds of questions we have. There's one final question that is for adjusting this strategy perfectly, and that's finding out what hourly RSI over here is the best threshold for buying. is it 20 as indicated over here? Or should we actually also buy during these kind of dips? Right? Should we buy when the hourly RSI say at 24? Or should we maybe even buy it when it's at 30? What would have worked best historically speaking if you look at all of Fantom's history, at all of Fantom's price history, assuming we use the hourly relative strength index, right? So I want to know, is this here the best? So is this the 25 RSI, or is this the 20 RSI, or maybe even the 15 RSI? Should we be even more picky, right? The higher we go here with the RSI, the more buying signals we potentially have. Okay, so that's one of the ways to look at. Now, as said, the best trading strategy that I have simulated and backtested with that hourly RSI, it netted these kind of returns. Now, you might be wondering, how can I know that these kind of situations actually happen, right? I can't every hour check every chart that I want to potentially trade, right? Maybe you don't just want to trade Fantom, maybe you want to trade other things as well. How can you find these kind of points in time? And for that, I've set something up. It is not for free though. For that, I've got the premium membership. And when you sign up over here for the premium membership, it's currently $49. It's a bit cheaper than usual because of the bear market, right? There's not a lot of people that currently trade crypto. If you sign up for this, you will get access to something called the premium alerts channel, the premium indicator alerts channel. So by the way, you can also sign up for the yearly. So that's then $490. So you get 2 months for free. Let me show you this premium alerts channel. So this is an automatic bot that monitors several cryptocurrencies and that gives us alerts and also explanations for those alerts. For example, over here, the hourly RSI is below 26. Backtest suggests that the price is likely higher 26 hours from now. So here you already got a little spoiler of what's actually the best setting over here. And I've already presented this in a way shorter format for the premium members. So the content, the videos, etc. for the premium members, it's a bit more advanced, right? I basically just go through the results very quickly. I'm not going to explain all the fluff and all the general ideas behind this. I'm simply just going straight to the facts. So if you only have 20 minutes to get a new profitable strategy, you can simply watch these kind of videos. But here you go, you get these premium alerts where you then get, for example, when Solana is very low or when Fantom is very low. The current cryptocurrencies that we look at over here are listed in a pinned message. If you need other cryptocurrencies added to this, simply ask us then in the chat. So there's also a premium chat where you can ask me any questions. You can also ask me to add other cryptocurrencies to this. Currently, we've got the following over here. I'm not going to read them all out. You can simply just look at this. This is currently what we have. We've also got a few stocks. Okay, so that's the idea. Now let's look at the first result, because I've already talked way too much and you came here for the result. So I've got now several charts. Let's first look at the average trade return. So what we've drawn over here in red, right? I just noticed that I haven't shown you the entire chart. But you probably could follow anyway, right? So this is basically how it looked like. So now we're gonna just look at the average red line over here, right? How did the price behave after the hourly RSI signal? And that's the result of the backtest, the expected return. So what you have here on the x-axis is the duration, the holding duration of the FTM token after the signal in hours. And on the y-axis, we've got the return since purchase. And so we see over here that there is a certain time period when we hold for that time after the hourly RSI signal, we would gain. And then at a certain point in time, that return levels off. The oversold condition normalizes. The price simply just moves as always. And so this particular chart here is with the 35 RSI threshold, right? So when we buy or sell according to an RSI level of 35. So I have backtested all the RSI levels from 35 all the way down to 15 to see how much more profitable do we get by being more selective. How does the oversold condition change? So what I'm going to do now next is I will flick through all of this. I will flick through those charts and I will look at how is this performance developing. So this is the 35 RSI. This is the 34 RSI. Note the shape of the curves is pretty much the same, but what very often changes is the y-axis over here, right? So that's the main thing that changes, not necessarily so much the shape of this curve. So let's look at other RSIs. This is the 34 This is the 33. Now we are going to 32. Now we are going to 31. So note when we are, say, at 34, we are at 3.5, below 4% in terms of the maximum we can get in terms of recovery. When we are more selective with buying, now we are at 4%. If we are even more selective with buying, so the RSI threshold goes lower, then we go above 4%. So this is now already between 4 and 4.5% with 31 RSI. When we look at the 30 RSI, the line further increases. When we go to 29, we're now constantly above 5%. Pretty much, if you're wondering where this level here is, this is pretty much at 1 day from here. So 25 hours from here. So the recovery after an oversold condition for Fantom takes around 25 hours if you take the 29 RSI. And on average, you could expect a return with such a trade of 5%. Now let's go further. This is 28. The 28 RSI, it peaks here at almost 6%, but it flattens out in the end, right? So the question is it worth to be in the market for that much longer for this marginally more return? We potentially also take on more risk. So let's go further. This is a big jump. This is the 27 RSI. We are now at 6.5% per trade. This is the 26 RSI. Yes, we've already seen in the Telegram chat, this is actually what we're going to use. So the 26 RSI works the best. The average trade when buying according to the signal returns 8% per annum. And the hours we want to hold after such a signal is simply 26. So we buy, we don't look at the price anymore. And then after 26 hours, we sell again. We do this all the time. We get on average 8% return. By the way, how many trades did we make in Fantom's entire history doing this? Approximately 100. Okay, so this is around 2 trades per week. Note though, sometimes these trades are clustered. So when we are for an extended period of time in these periods, we would buy every single hour. Okay, so that's the back test over here. We're not just buying once. Once we go into the territory, we would buy all the time while we are at this depressed price. Okay, so that's the 26. Now let's go next to 25. Okay, so this is going to a similar degree. Now 24 is even slightly higher. Here we've got 8% at a 40-hour holding period. 23 seems to be the best. Okay, so 23 has, for a similar holding period, 8.5%. Now why do we take 26 and not 23 in the Telegram channel? It's because there are less signals. So the 23 RSI has around double the number of signals as the 23. The 23 only had around 50 buying signals. So you would make those 8.5% only half often compared to the 8% you would make with the 26 RSI. And so to simply have more buying signals, we take the 26. But you might consider taking the 23 if you're inclined to do so. Next, we've got 22. And let's go through this quickly because it does not become better. We become more and more selective with this. The 20 RSI is still okay. It's the same RSI we use for dollar cost averaging. But once we go beyond that, our performance per trade suffers massively because simply we don't have enough trades, we don't have enough sample size, and in the end, we don't really make money from all of this. It's just random. And we can even notice the further we go out here, once we go to the 15 RSI, right, the maximum we get here is 6% per trade. So it's not worth it. We want to keep it at the 26 RSI, holding it for 26 hours. Okay. Now, let's look at the following. When we buy the dip with Fantom, right, what's the risk associated with this? So if we buy according to this hourly RSI, as mentioned before, when we buy according to this, and we simply hold this for a short period of time, so 24, 26 hours, something like this, how often does that actually work, right? What's our success rate of buying the dip? Because sometimes it doesn't work. Here in this example, it worked well, right? The hourly RSI is low. We afterwards recovered. So all good. Let's adjust this chart a little bit. Now, when we look further out, here we also had a very nice here we didn't have the direct recovery, right? So we have this trading signal over here, but then we didn't directly recover. We actually went down a bit further afterwards. So how often does it work when we buy Fantom during such a depressed time when the RSI is very low? How often do we make profit? How often do we lose? Depending on what RSI level we use and depending on how long we hold after such a trade. And for that, we want to look at the success rate of buying according to that strategy. And here we've got our first chart. So this is the success rate, the 35 RSI threshold. We are looking at 35 all the way to 15 for the threshold. How often does a trade work when we buy, when this level here is very low and we hold for several hours? Now here on the x-axis, we've got the duration, right? How long are we holding after purchasing? So when we hold, for example, for 10 hours and we buy whenever the hourly RSI is at 35 or below, then we would on average be right 56%, 55% of the time. If we hold for 1 hour longer, then we would be right 58% of the time, right? So if you want to be right most of the time, or the most that's possible according to the 35 RSI, then you would want to hold for as long as here, which is a success rate of 62%. And the hours we are looking at here is 27. Okay, that's how long you would want to hold. So let's now look through the details. Let's look at different RSI thresholds. Let's see if we are more selective. We buy when the RSI fell even further. Are we actually increasing our rate of success? Are we on the safer side of waiting for lower RSIs before we buy? And how long would we have to hold in those cases? Okay, so this is now the 35 RSI. Now I'm going down with the RSI, meaning we are more selective with the purchase. We are waiting for more fear in the market. And so I'm just looking through this. Simply look again here at the y-axis for the success rate and see if that changes. So far, 62 seems to be pretty much the highest, right? And it always seems to be so far, now we are at 32, at around the 24-hour mark where we peak in terms of success. Now we are at 64. Okay, 64% likelihood of winning. Now we are already at 65% likelihood winning. So 2 out of 3 trades here make money if we buy at RSI 29 or below and we hold for roughly 1 day. Now we are looking at the interesting parts. 28 RSI, we are already at say 68% or so. Now we are again at 70 something. And look at this, right? 26 RSI, we are at 75% success rate, right? So this is holding for 26 hours with an RSI threshold of 26. 3 out of 4 trades historically work the best. And it doesn't even matter that much for how long you hold. You can sell somewhere between say 14 hours from now all the way to 40 hours from now. You would always win in around 70% of the cases. But if you want to optimize, you hold for pretty much a bit over 1 day and you come up with a success rate of 75% historically speaking. Let's look at further reduction, at being further selective. So I'm just toggling further through the charts. RSI 23, RSI 22. And we can see now that these charts become more choppy, right? When we now look at the RSI 20, for example, we can see how this chart here jumps quite a bit in the success rate. And that's simply because there are not so many trades when you trade according to the 20 RSI, right? How often does the hourly RSI of Fantom really fall below 20? Not that often, right? And so you can't really measure your success rate that often. If you look at an RSI of like 30, you get way more buying signals, right? We are below this way more often. And so since we have less data, the chart becomes choppy. The results also become less reliable, obviously. And so I wouldn't take too much confidence in these numbers that we really get these kind of success rates when we are that selective and we look at the RSI of say 17, right? There's not a lot of trades going in here. I think for the RSI 15, we only had in the end, in the entire data set of Fantom's history, only like 4 or 5 trades. I think it's 5 trades. Yeah, this is jumping in 20% increments. So that's what kind of a risk you face when you buy the dip. If you do this very smartly, if you take the 26 hourly RSI and you hold for a bit over 1 day, then historically speaking, you would have gained in 75% of cases. No strategy works perfectly, right? So still in 1 out of 4 cases, you lose. But 75% of a success rate, I think, is already very, very good. A lot of trading strategies will not have this kind of success. That being said, this is still looking back into the past, right? This is retrospectively. This is, however, in the past, it was a relatively consistent gain, right? This is relatively consistently going up. The losing, it's not like we see a bit of a positive performance and then suddenly a crash and then a performance again, and it only works sometimes. This seems to have worked pretty much constantly over time. And so nobody knows if this continues to work again, right? Nobody knows if the chart will continue to go up. But I think it's the best way to use technical indicators. I think it does make a lot of sense to simulate buying and selling, to backtest this, and to find out what would have worked in the past, because it is a potential indication that it might work again in the future. And so that's what you have, right? Don't buy any dip. Buy only dips that hit at least the 26 hourly RSI, and then hold it for 1 day, and you should be good in most cases. That's at least what the data suggests. And so that's your strategy. What's your strategy for Fantom? Let's say it all again in a nutshell when trying to trade Fantom. If you don't want to hold on to this for the long term, but when you just want to trade it, when you want to take advantage of bearish times such as today, right? What is the best way to buy the dip? Let's look at all the data, all the buying and selling simulation data, all the most important things in a nutshell. Let's look at what really works. And so the best result that we can get in order to generate this kind of a return, the best result is to buy whenever the hourly RSI is at 26 or below, right? You want to buy during those kind of times. You want to continue buying. So say the hourly RSI stays below 26. You want to buy every single hour. By the way, when we look at this, how many positions in parallel would we have open when we do this? The maximum number of positions when we look at the buying and the selling was 10 parallel positions. Okay, so when you follow such a strategy, when you buy, whenever this hourly RSI is at 26 or below, and you follow this, you want to have at least capital for 10 positions, okay, for buying 10 times. So don't buy more than 10% of your trading portfolio. So when we look at this and when we see the backtesting result, right, we see this kind of a portfolio development. And then when we sum this all up, what we come up with is an average return of 8% per trade. So you buy when the hourly RSI is below 26, you hold it for 26 hours. You don't look at the price in between. You just sell after 26 hours. You don't care what the price afterwards is, because the money that we make, right, the restoration of a balanced price after such an oversold condition, the balancing out of all of this happens after 26 hours, and then you can expect on average a return of 8%. At least that's what happened in the past, right? Expect or not expect, it's always a question, right? It's unlikely that price dynamics will be exactly the exact same as they have been in the past. So I would take some kind of security buffer here, and this is also not considering any kind of slippage or gas fees or things like this. So you might want to consider this as well. So for example, when you buy on SpookySwap and you swap in and out on SpookySwap, you pay 0.2% fees to the SpookySwap exchange. So in the end, when you really generate this, you maybe only get 7.6% per trade. That being said, when we look at the capital development, this is not looking at any kind of DeFi returns that you can get from lending out your FTM or your stable coins, or it doesn't look at any kind of liquidity pool farming where you could earn trading fees. So this is all just flat money development, right? So maybe you can get all those trading fees back by simply deploying the money in DeFi. Okay, so you want to buy when the hourly RSI is below 26. You want to hold for 26 hours. You get 8% per trade, roughly. This kind of a trade works on average in 75% of cases, right? After 26 hours of holding, it works in 75% of cases. And maybe one last thing that we want to look at is what's actually our worst trade in the history. So if we did this in 25% of cases, it worked, but sometimes it didn't, right? So how much did we actually lose when it didn't work? And for that, we've got the following chart over here. When it didn't work, our worst trade was at around -12, -13% in that kind of region. So not too bad, right? When we win, we make 8%. When we lose 12.5%, right? 2 winning trades already counteract 1 losing trade. And since we win in 75% of the cases, in the end, we have a positive return. So that's what all of this is about. If you're interested in getting signals whenever this hourly RSI hits, feel free to check out the premium membership where we've got a Telegram channel where these kind of signals get broadcasted. This is the link, right? The bitcoinstrategy.com. In the video description, you can find it. You can click on this. Thanks for watching. Hope all of this information is useful to you. If you've got any questions around this, because obviously this is not super easy to digest, there's a lot of math, a lot of graphs involved in this, feel free to ask this. By the way, if you want to get a tutorial on how to run such a backtest yourself in Microsoft Excel, that's also available in the premium membership. You can download the Excel file that has all the calculations presented in this video. You can watch a video where I built step by step exactly this kind of a backtest. And of course, you can get the signals whenever these things fire. There's a lot of other things. Feel free to simply check out the website. So thanks for watching. See you next time. One more thing. You might want to watch another video. That's pretty important, actually. You might want to watch the hourly RSI DCA video of Ethereum. So when you buy Ethereum, whenever it's below the 20 hourly RSI, you get a discount, right? So it's a similar strategy. You want to buy when price is depressed. The strategy behind this for Ethereum in a lot of detail, it is described in the following video over here. So feel free to check that out. Thanks again for watching. See you next time. Bye-bye.